Enid wants to know if she can write off her implants.
If recommended and signed by a doctor, then yes, that would be tax deductible.
Yeah. The US legal system is you're innocent until proven guilty, but for tax purposes, you're actually guilty until proven innocent.
You guys all heard this first, right here.
That is a legitimate way for Chef Chen to be able to improve on his house and then be able to get a tax benefit from it.
Chef Chen is asking us, can I buy an outdoor kitchen for my investment property, but install it in my private residence and still write off the cost?
The answer is unfortunately no. You'd have to be able to show that you're using that kitchen for your rental property. It might be hard to do if the kitchen is located at your primary residence.
Who's gonna go to investment property that's already been sold years ago?
Let me give you like a more legitimate strategy surrounding this kind of similar scenario. So let's say Chef Chen buys a house and he spends a lot of money to rehab it, make it like the most amazing house ever. He builds in this outdoor and indoor kitchen. It's super amazing. He lives in there for a couple years, but if at any point he turns it into a rental property, now he could start to take depreciation and write off a lot of those expenses. So that is a legitimate way for Chef Chen to be able to improve on his house and then be able to get a tax benefit from it. And if Chef Chen were to move out of that home, after enjoying it for a couple of years, and he turns it into a rental property, he gets to have cash flow, right? Rental income. And if he were to sell it within 3 years of moving out, he could still exclude up to $500,000, assuming there's a Mrs. Chef Chen. He can exclude up to $500,000 tax-free from gains. So it's like the best of all worlds.
What I'm hearing from this particular question is Chef Chen wants an outdoor kitchen at his personal residence.
Yeah, he could right now.
But to write it off.
But for him to, he would just have to delay the write-off until he actually turns it into a investment property.
Or if he starts doing events in the backyard of the primary residence and gets paid to do these events and using the kitchen, that would be a way that he could take write-offs for it.
True, maybe if Chef Chen is not a real estate investor, but he's like a YouTuber, or he's a true chef, and that's kind of what he does, or he, hosts people in the backyard. That's his business, to come to my amazing backyard and I'll cook for you for a fee, then those are examples where he could be. But if it's just outdoors, cooking for myself and my family, then probably not.
Playboy Paul is wondering, if I give money to my illegitimate son, can I write that off?
Why is it illegitimate son though? What is the meaning of illegitimate son?
Playboy Paul's not here to answer these questions.
I assume that it's just that he's not listed as the father on legal documents.
When you give money to your kids, it's never a write-off, right? Because you're just giving money to them. Like if you give money to anyone, it's not generally a write-off. I think the question is, how can you write it off? And that could be money given to anyone, including your kids, legitimate or illegitimate, as long as we find a business purpose in the exchange of that money.
An example would be you hire illegitimate child number one for your business. I would assume you have more illegitimate kids, I guess.
He's a playboy.
Yeah.
Playboy, yeah.
You hire this child in your business, have them help you with your duties of your business. Maybe you're running some real estate, maybe you're marketing your properties online. They probably know more about stuff online marketing than you do. You could hire them, pay them just like any other employee, and you would take a deduction for it. And then at that point, they can use that money to go pay for whatever things illegitimate kids pay for.
There are benefits to having children as dependents. Like if you have children, they're your dependents. When you file taxes, there are benefits, right? So can Playboy Paul take advantage of those benefits?
Yeah, you can claim people as your dependent even though they're not like your child, So like people who live with you, you probably provide more than 50% of their support. So sure, he could do that. But I was assuming when you say illegitimate, it meant like, I don't know, maybe it's like a secret, he was hiding from his wife or something like that. In that case, no, he probably wouldn't want to claim the dependent.
Some issues he might run into would be if the mother of the child also tried to claim the child on her tax return. What typically happens is you have to show a social security number. IRS computers will match up to say so-and-so has already been claimed. or so-and-so's already filed a return with that person. And then it triggers something in the IRS computer there where you get to be put on the IRS mailing list and have to respond to questions.
Yeah.
How is that different from two parents filing separately, both who claim a child?
Yeah, you can't
both
do that.
claim them.
Oh, okay.
I love the idea of, being able to like have the child, however old he is, to work for Playboy Paul in their business, in their real estate, because not only do you get to like pay them, shift income, get a write-off for it, but also just maybe some like really needed, parent-child time together too.
The next question is from Exotic Enid. Enid says she works as an exotic dancer, and Enid wants to know if she can write off her implants. But I'm assuming these particular implants make her do her job better.
Yeah. I think contrary to popular belief, exotic dance, so being an exotic dancer doesn't automatically you can write off your implants. But for implants, there are two reasons, two scenarios where you can write it off. The first one, and there's been court cases on this for taxes, that it has to be so extreme that there's no other purpose to getting it except for, like
Being an entertainer.
yeah, being an entertainer. Yeah, you can look it up. There's a lady named Chesty Love. And then when you see the pictures, you'll get an idea on why that was deductible. And I think most adult entertainers or entertainers in general don't go to that extreme. But if Enid is someone in that, realm, then potentially it is. But I'd say most people, even entertainers, don't get to that level of where it becomes deductible. That's such a gray area too, because even not adult entertainers, but entertainers in general, right? It's kind of like, well, I have to look good, and where's that line of when it becomes a business deduction? But I think that I was going to say the other scenario where you write off, implants and nose job and things like that is for medical reasons. So for medical reasons, it's a medical deduction. That's why oftentimes that's like almost like the easier route to take. So what do people always say? They have like a deviated septum or some kind of nose thing, then they get a nose job, and it's because the doctor says you have to do it. What if I need a breast reduction? Is that the question? A breast reduction instead?
For health.
If recommended and signed by a doctor, then yes, that would be tax deductible.
I think that's not an uncommon thing. I mean, I don't know, but I don't think it's uncommon for back pains and things like that. But again, probably have to be pretty extreme, like to have back pains.
So basically, if you're fixing something wrong rather than enhancing something, that's the difference.
I feel like the enhancement has to be, again, pretty extreme.
Can I sell my investment property to my mom or dad or brother or sister for $1 to generate a bunch of losses?
You certainly could sell it to your brother, sister, mother, cousin, Harry, or whatever their names were. But to generate a loss, that might be a stretch. I don't think the IRS is going to let you do that one.
In the real world, when you sell it to, it's called a related party, right? Because we're related to each other. So not we, like you're going to sell it to me for $1, we're related. So that means I can't take the loss because it's not a true loss. Now, if you were to sell it for $1 to somebody else, like Jessica, unrelated, then that could potentially be a loss. But even then, the IRS will say, well, why did you do it? That's not really reasonable. So maybe maybe it's actually a gift, right? That you're gifting it to her. And when you give gifts, you can't take a write-off for it. So same thing, like if you gifted it to somebody unrelated, it's still not a write-off.
The other thing too is that if she bought this for some value and it's really only worth $1 now, then she probably needs to come up with a better name than Investment Ingrid.
Okay, you know who tries to do that? Is people going through divorce, right? So they have an asset. Let's say, Ingrid is going through a divorce and she wants to hide her assets, hide her real estate from her husband. So she tries to sell it to her cousin for $1. Also, that's not gonna fly.
Well, it needs to be a non-relative, right?
It needs to be non-relative, but also it just always needs to be like reasonable, right? If you're doing something that's not reasonable, then usually there's no substance for it for tax purposes. But I love where this thought process is coming from, but the answer is no.
Supercar Steve is next. Supercar Steve asks, I need a Lamborghini to drive clients around to show them properties. Is my Lamborghini a business expense?
It certainly can be, yeah. You have to be able to show that you are driving your clients around, and we would encourage
Supercar
Steve
Yeah.
to use that vehicle to drive around clients for more than 50% of the miles that he's driving the car. So in a perfect world, he doesn't drive it at all, except when he's driving his clients around.
I think a question we get a lot too is like, because I think writing off a car for real estate investors is pretty common, but a question we get a lot is, what if I want multiple cars? Like, I want a couple Lamborghinis, a Maserati, I want all these cars. And so it becomes much harder to argue like, well, I need all these cars for me to drive around, different investors and different clients. And so what you could consider is turning those cars into a business, right? So like, if I have a bunch of exotic cars, if it's doing nothing while I'm not using it, then maybe you can rent it out. So if you're renting out your car, I don't know if it's Turo, but they probably have better, platforms for luxury exotic cars like that. You rent it out, make some money, and then also that just naturally becomes a business asset too.
But you could legitimately be using 6 Lamborghinis to drive your clients around though. What if somebody actually did that?
You could, but I think it's just a little bit harder to make that argument, right? Like, is it reasonable? Did you really need 6 cars to drive your clients around?
Innocent until proven guilty, right?
So that's actually what a lot of people tend to think, because the US legal system is you're innocent until proven guilty, but for tax purposes, you're actually guilty until proven innocent. So the IRS doesn't have to prove you didn't use all 6 cars. You have to prove why it was necessary for you to have 6 cars to drive around your investors.
And it seems like a big headache to keep track of all that too.
Foreman Fred is wondering, one of my employees was hurt on the job and now he needs a hip replacement. Is the cost of that a write-off?
I'm assuming Foreman Fred is asking if he pays for it. Would that be a write-off to Foreman Fred?
That does seem like what he's asking. Yes, Foreman Fred is paying for the hip surgery.
Okay, Foreman Fred.
Yes.
Yeah, for sure. If the crew member got hurt on the job as your job site, as your crew, and you felt like you wanted to cover the cost of that.
Or get sued.
Or get sued, one or the other. Yeah, it seems to me that would be a good argument for ordinary necessary business expense that could be deduction.
I think people will be surprised at how frequently we see that kind of stuff. Like when we do tax returns, we see things like a lot of like medical bills and just random things like lice shampoo, just things that you wouldn't expect to see, and we ask questions about it. So it's usually like on the job site kind of expenses. So yeah, I mean, those are things you just want to track, because I think normally you would think, how can I write off like a hip replacement, But I mean, if it occurred on the job, was part of, how do I want to say it? It was part of the work to get like, your rehab done, then generally those are things you can write off.
Next question comes from Mansion Mark. Mansion Mark says, I'm buying a house that has an asking price of $2 million. Can I tip the seller $1 million? And for being a nice guy, he, in exchange, lowers the price of the sale price $1 million.
I guess you might do that for property tax purposes. Have a lower property tax base.
Yeah.
But I'm guessing Mansion Mark, when he goes to sell the property, would like to claim that he paid $2 million for that, since he gave the guy a $1 million tip. That might be a challenge if he got audited to support $1 million for property tax and $2 million for income taxes.
Yeah. What's really funny is like President Trump ran on no tax on tips. And that was actually a joke I made. It's like, if it were to pass that people don't pay taxes on tips, then people are no longer gonna have rent, like your rent is gonna be, your rent is gonna be $1 and the rest I will take it in tips. Same for salaries too. Everybody you pay will just, if you go to a restaurant, it's like $1 for the meal and the rest in tips.
Really got to earn your tip at that point.
You guys all heard this first right here.
We've seen something like kind of similar, not to that extreme, where it's like $1 million, like half of the purchase price. But I think it's not super uncommon for people to lower the purchase price a little bit, because if it helps the buyer save on property taxes. But as long as it's not like super extreme, like especially people who buy property fully furnished, then they might say, okay, of the $500,000 purchase price, maybe $50,000 of that is going to just be furniture that you're buying, so it helps them to lower property tax a little bit. But I think for Mansion Mark, the numbers are just a little bit extreme. I feel like you ask questions that people, don't really want to ask.
And again, these are all user submitted.
Obviously.
Yes,
Not from Ridiculous Roger.
No, they're not made up. buy one.
None of this is tax advice, as usual. We say talk to your CPA about it, but especially for today's episode.
And some of these questions you need to talk to your attorney.
But if you like this segment, make sure to like and subscribe. And if you have ridiculous, crazy questions you're afraid to ask, submit to support@keystonecpa.com, and we'll give you all the wrong answers.